There's a quiet question sitting in the background of almost every serious conversation. What kind of accounting firm are we actually becoming? And who is going to thrive when the dust settles? It's not breaking, it's not collapsing, but it's a realignment of power and of relevance, of leadership and of direction without realizing until it's too late. No, if you think change is hard, try not changing. If you lead an accounting firm right now or expect to over the next few years, there's a quiet question sitting in the background of almost every serious conversation. It's not what software should we use or how fast should we move or what's happening with AI, but it's this. What kind of accounting firm are we actually becoming? And who is going to thrive when the dust settles? And running underneath that on a personal level, you're asking yourself, what kind of an accountant or advisor do I want to be in this new world? In recent episodes, I've talked about the shift that's happening in the splitting in the accounting world. It's something subtle but serious that's happening in this profession. It's not breaking, it's not collapsing, but it's a realignment of power and of relevance, of leadership and of direction. And AI is changing that. Private equity is changing that. So many things are changing now. In the first episode, I said that the accounting profession is splitting on the different kind of firms that are emerging: the automation-led firm, the relationship-led firm, the scale platform-led firm, the technology-led firm. And you can go whichever direction you want, but you can't go in all of them. In the second of this is last week's episode, I said that firms can't optimize for everything and they're being forced to choose a direction, whether they admit it or not. And this is the third, this is the cherry on top, if you like, not to escalate the movement, but I'm feeling very contemplative. This is the Accounting Voices podcast. I'm Rob Brown. We've been running this show for a number of years, giving you not the news on accounting. There are plenty of outlets, media platforms, podcasts to give you that, the up-to-date stuff, but this is the general shifts and what's happening. And so I want to interpret the conversations I've been having about what it's revealing about firms and who's inside them. Because if you're honest, you're not lying awake worrying about technology or AI. You might end up worrying about being on the wrong side of things, wrong side of change without realizing until it's too late. Not failing, not dropping off a cliff, but slowly becoming less relevant. That anxiety exists on a firm level and it exists on a personal level because accounting's not moving forward together. Yes, there's evolving of a profession for sure, but some firms, some outfits are going faster than others. And there's a realignment taking place and leadership relevance is being tested. Leadership strategy is being tested. And I want to give you 5 signals that keep surfacing in the conversations that I'm having. Number 1 is the discomfort is not about AI itself. We can't get away from the AI conversation. It's here to stay. It's not going away. Most leaders accept that. The tension is about 3 things. Who decides how it's being used? Who carries the accountability when it fails? And accountants, as the guardians of data, are responsible for that. And who quietly loses relevance as others in the accounting profession really take it on and run with it? And that question shows up for firms and it shows up for individuals because when the work changes, the status changes too, the revenue models, the business models change, the client expectations change. So that is the first big signal, is the discomfort's not about AI. It's about other things to do with AI. Another signal I'm coming across is that the partnership model is emotionally defended, but not structurally secure. What do I mean by that? It's emotionally defended by people in the partnership model because their vested interest is to keep things as it is. But is it structurally secure? We're seeing more and more pressure on the partnership model. In public, confidence is high, but in private, succession anxiety is widespread. At firm level, it's about ownership, continuity, revenues. At individual level, it's about aspiration and options. And people are quietly asking whether the path they're on still leads somewhere they want to go. A lot of the younger generation don't want to buy into a partnership model now. They want something different. The third signal I'm seeing is leaders are getting caught between speed and stability. If you move too fast, it's hard to hold culture. It's hard to hold a strategic position. If you move too slow, then your relevance erodes and you get left behind. The tension's not just organizational, it's personal as well. I see a lot of people trying to decide how much to adapt without losing what they already do professionally, what they already know professionally. They're wondering how much to change and how much time to spend on ChatGPT and how much time to spend building a personal brand. There are no clean answers here, but people are always wrestling with this. This unresolved tension is where many leaders and future leaders, well, they find it exhausting. Signal number 4 is the middle of the market feels most exposed. I co-host a podcast with Chelsea Summers at the Inside Public Accounting outfit. They do some amazing data-led research which talks about, amongst other things, the difference between the good firms and the great firms. And the middle of the market is feeling exposed. There's such a huge amount of change. If you're a large firm, you can fund change, you can back change, and you can fall back on resource when you make the wrong decisions. But small firms, well, small firms can stay personal and local and agile and intimate. The middle firms, these mid-tier often feel squeezed from both directions without clear strategic cover. There's a fight to stay independent. There's a fight for succession and handing the firm over and making it relevant. Inside those firms, the individuals feel it too, because there's a lot of unclear signals and mixed messages and conflicting priorities and different expectations. There's an angst there. There's a tension. If you're in those firms, you can maybe feel it. Signal number 5 I'm seeing is what leaders want most right now is not answers. It's reassurance that things are volatile, that their uncertainty that they're feeling is rational. There is no one right way to go. And that's difficult, isn't it? You're caught in the headlines and wondering whether to stick or twist, go black or red on the roulette table. And leaders are concerned about missing the obvious things and making the wrong calls. And it's hard not for that unease not to share through the firm. So it applies to the managing partners, the board, the senior people, quietly wondering what kind of advisor they need to become next, what kind of a firm they need to be to stay in the game and fulfill their commercial objectives. And there's a lot of interpretation goes on here. It matters more than the information that's available to you. So what does this mean if you're already leading a firm or owning a firm or stepping into leadership, because this firm is aimed at people at the top and going to the top? And equally, if you are listening aspirationally and you're a wannabe leader or a future leader, what kind of accountant or advisor are you wanting to be? So I'm giving you these takeaways now, not as instructions, but as orientation, things to reflect on. Number 1, stop chasing certainty. Yes, people buy certainty. It's very compelling. It's awe-inspiring. It inspires confidence. It makes people buy, but uncertainty is really difficult. There are so many different models of certainty, but there is no settled blueprint for success in 2026. Different firms and different individuals are doing it in different ways and they're winning. Now, there's a cost to every benefit, but the firms that pretend to be certain, they might be losing some credibility. It's really difficult to hold on to a position because some things fracture around the edges. Individuals who wait for certainty also stall their relevance. It's really difficult to put all your eggs in one basket. So there is that element that accountants do really well of sitting and waiting and watching and seeing and lurking and observing from the sidelines and waiting for a definitive position to emerge. It's hard. No one model of success, no certainty. Judgment matters more than confidence. That's what you've got to think about now. Number 2, takeaway. Invest time in interpreting, not just in consuming information. You don't need more dashboards. You need people who can say, this matters, why it matters, this doesn't matter, this is still unclear, we need to know more about this. And that filtering role, providing context and influence, is becoming core leadership work. It's knitting the fog, as they say. It's becoming a fast path to individual relevance and influence too. So think of yourself as an interpretation of the data, the one that tells the stories behind the numbers. That's always going to be relevant. Number 3, takeaway for you is pay attention to where discomfort shows up. There's a lot of it within firms, in between the lines, in the org chart. Resistance, fatigue, cynicism are signals, generally pointing to some unclear trade-offs, some unspoken fears, some hesitancy, decisions being delayed too long, trust being put off, new people coming in, old people leaving. At the individual level, it's quiet quitting, disengagement, quiet doubt, concerns about the culture, the direction, and ignoring them doesn't make them disappear. And if you're leadership, you've got to be aware of what your people are feeling in the ranks. Number 4, takeaway is be explicit about what you are not trying to be. So many of us want to be liked. We want to be loved. We want to be respected. We want to be relevant to as many people as possible. But a lot of firms are struggling because they want to be everything. They want to be all kinds of different firms. They want to automate, and yet they want intimacy and great relationships with clients. It's hard to do both. Many firms are struggling because they haven't chosen a direction. They haven't picked a lane, or different people within the firm want different things. It's true of careers. What kind of a career do you want? Do you want to be immersed in the automation and the AI and the technology, or do you want to be immersed in the people and the stories and the narratives and the really making a difference and the advisory stuff? It's hard to merge both. There's a way. Some people are doing it really well, but you've got to find that way. Leaders create relief when they say, this is what we're building and this is what we're not going to be. And individuals can create some momentum, some impetus when they say the same thing about their role. So clarity reduces anxiety more than reassurance ever will. You've got to be clear. Number 5 takeaway as we draw to a close. For future leaders, relevance beats tenure. I don't care how long you've been there. There's a lot of people been in firms a long time that are not relevant anymore. They're just hanging on. The next generation of leaders are not going to be defined by how long they've stayed. They're going to be defined by how well they understand how change actually lands inside the firms and the drivers of those change. They're going to stay relevant by being trusted in moments of uncertainty to chart that uncertainty and provide clarity. And they're going to stay in the game by helping others make sense of complexity. This is the new leadership model. And if you're an apprentice leader, this is what you've got to be leaning into. So we're drawing this season to a close. Got a couple more episodes. At the end of last year, I recorded a series of short conversations with firm leaders and influencers, acting on 2025 and looking ahead to 2026. Not to collect opinions so much as to listen for patterns. And over the next couple of episodes, I'm going to explore what those reflections revealed. Not everything, but just what genuinely matters and the themes that kept coming through. Beyond that, Accounting Voices is going to be shaking things up a little bit more to help leaders and future leaders make sense of what is already happening. So this little series wasn't about answers. It was about naming the tension and calling out. And from here, the conversation becomes more grounded, more selective, more senior. And this is where Accounting Voices belong. Thanks for tuning into the show on all podcast platforms and on our growing YouTube channel. We're also on LinkedIn at Accounting Voices. And if you want to join the conversation in North America, where most of our audience is, we've got another Accounting Voices Collective speed networking session coming up at the beginning of February. You are welcome to come to that. Just reach out to me on LinkedIn. Thank you for tuning in. Have a great day. And remember, if you think change is hard, try not changing.